One of the items certainly shaping that trade is oil, and 10 days into OPEC's production deal, and cracks are already starting to show. Oil exports in Iraq's southern ports hit a record high in December, while the country's energy minister stressed they would not increase that the increase would not affect Iraq's decision to lower production. It raises concern over the feasibility of the cuts. Meantime, rising US output weighed on sentiment, with energy companies adding oil rigs for a 10th straight week. Well, joining us now is Tim Evans from Longleaf Trading Group. He speaks with us live from the CME in Chicago. Tim, hello to you. Thank you so much for joining us. Just as we mentioned in terms of that rig count, the rig's certainly back to work. US drillers increasing the count the most since January. We've got a chart, in fact, to highlight this to viewers, just taking a look at the number of drill rigs in line with the WTI price. In fact, for those viewers watching, the white line there is drill rigs and the blue line is the WTI price that we've seen of late. Tim, would just love to get your take on this, please.
Hi, nice to be with you today, Natalie. Yeah, I mean, absolutely. I mean, U.S. producers have gotten active again. I mean, we've seen, I can't see your chart where I am, but I know the slope of that line, and it's up. You know, we've consistently seen U.S. producers continue to put R&D and investment into future production. You know, the market prices have given U.S. producers the ability, you know, to lock in profitable price levels. That allows them to reinvest the money that we're seeing reflected in this rig count data every week.
Absolutely. And certainly, I mean, that's coming through in terms of the volatile trading that we have seen in the oil price of late. I mean, just give us some color around some of the trading action that you're noting.
Yeah, I mean, at the end of the day, I mean, we're you know, we talked about this, you know, over the course of a couple weeks as we were approaching, you know, whether the OPEC was going to be able to put forward that production cut. And, you know, at the end of the day, what we're balancing is, you know, the prospects of what the market impact would be, you know, upon compliance, and then what would it look like the market if there were non-compliance. You know, most producers that are part of OPEC have indicated and have so far shown that they're trying to comply. But, you know, all it took with a little conversation over the weekend regarding Iraq, and, you know, the fact that they have apparently sold their February production to, you know, some Asian and European customers, which effectively leaves them needing to produce more, you know, to supply their other customers. So there's a lot of doubt in terms of, you know, the way they're going to handle that. There's concern that they're going to continue to produce to supply those customers. Because at the end of the day, all it takes is one actor, you know, to deviate from this plan, and the whole thing could come crumbling down. And, you know, I think the market's going to be concerned about that, especially here in the early stages of this. And the, you know, the price action that we're seeing, I think, is just a small preview of what we're going to continue to see as, you know, the market's trying to price in confidence that, you know, this deal is going to hold.
Well, with that in mind, let's just put those comments coming through from Kuwait oil minister sort of under the microscope, as it were, coming through saying expect a big commitment to OPEC, non-OPEC production cut agreement. Also saying the data of output cuts will be clear in February. And even if reduction not complete, it will be a start. So certainly looks like the picture will become clearer by February. I guess, does that mean that this volatile trade is set to continue until that point?
Yeah, absolutely. I think so. I mean, you know, I know what I'll be looking for, and I think a lot of other energy traders and investors and analysts will be looking at as well, is, you know, are we beginning to see it reflected in the DOE numbers that come out on Wednesday, the inventory data? You know, there's a lot of private sources that are being used to determine whether there's going to be compliance within OPEC. You know, I think a lot of people are quite skeptical in terms of the, you know, legitimacy of some of that data. I think most do have confidence in DOE data. So, you know, we'll be looking to see if that evidence is there, you know, each Wednesday as the DOE is reporting that.
Just lastly, also, Tim, just wondering the US dollar plays and how that's sort of shaping into this performance also.
Yeah, I mean, the dollar, you know, finding its highs here, and, you know, we've seen a pretty sharp consolidation from that 103.5 to 103 level in the U.S. dollar index. I mean, that really should be you know, a pretty positive factor for crude moving forward. You know, assuming that we don't, you know, take off from here and challenge those highs and, possibly leg through that. I'm doubtful that'll be the case here in the near term, but as long as we can keep a lid on this dollar, I think that should provide underlying support for crude oil, over the coming weeks.
Tim, we will leave it there. Thank you so much.
Okay, thanks, Natalie.